Welcome back. So all of those debt concerns and bond yield concerns aside, actually Asian markets have chosen to have a nice shade of green. Most of them, at least. The Taiwan market is also now turned positive, and the Nikkei is up about 0.7%. Because of this, the implied open is telling us that we'll have a positive start, 30 points up. So let's see if we can break the so far downward drift that we've seen this week. Our team is standing by, lots of stocks to track as well. So let's get to the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Let's start with all the big earnings that came in after market hours. Ekta, Sun Pharma, how does it look?
Well, interesting set of numbers because it was largely operationally in line, but what probably is going to disappoint the street is the commentaries. So the company did indicate that they're looking to invest $100 million in terms of additional costs on products, which should probably weigh down on the margins according to analysts. The company is also increasing its R&D costs to 6 to 8% of sales. Now, FY26 guidance is mid to high single-digit top-line consolidated growth versus earlier years generally, which have been high single digit to low double digit. So maybe the street is probably going to look at it a bit cautiously. The management did say that it is based on global uncertainties as of now. Revenue growth was marginally below estimates. What stood out was that US sales did not hit that $500 million mark as anticipated, came in at around $464 million, and global specialty sales came in at around $295 million versus estimates of over $300 million. So that's probably the reason why I expect the stock to be a little weighed down today. Overall, in terms of numbers, revenue was up 8%, margins 28.7% versus estimates of 27.7%, and profit of over 2,150 crores.
Okay, all right, Ekta. Thanks a lot for that. Well, let's hop across to Mangalam. He's here to tell us about ITC's numbers. Mangalam?
Well, ITC was a mixed set. There were some hits and some misses. So largely in line if you net all of that. If you look at the revenue, that was mildly above street expectations, 17,248 crores as against expectations of 16,820 crores. And the cigarette volume growth between 4 to 5% at the higher end of the expected band of 4 to 5% itself. Street expects that it has been about 5% for the cigarette volume growth. However, what's not good is that we've seen the EBITDA miss street expectations. EBITDA was shy of 6,000 crores as against street expectations of 6,100 crores. Margins also missed street expectations. And FMCG revenues grew 3.7% versus expected 6 to 8%. Here as well, the margin contraction of 270 basis points, the higher end of street expectations of 200 to 300 basis points contraction. What is it that the management said? They saw sharp escalation in key input materials. FMCG saw competitive intensity highly, more so in the notebook division. So if you strip that, the growth was 5.4%. And rice exports scaled up in the second half. That aided their overall agri business. On the back of mixed set of numbers and the fact that the stock has not done much, I go with mild green because there's no reason to either sell or buy ITC at these levels with the kind of stock performance that we've seen. And an 8 rupee dividend doesn't hurt. So going with mild green on ITC.
All right, Mangalam, thanks very much for that. You'll hear from Abneesh Roy weigh in on the companies at 9 o'clock, ITC and Colgate in focus there. But let's talk about Grasim. Nigel, tell us more.
Well, Grasim, you know, the core business, the core standalone business, that was a little bit disappointing. But otherwise, the new businesses, which is the B2B business as well as the paints business, that's ramping up as well. Let's run you through the basic numbers. As you see, the EBITDA number, well, it came in at around 220 crores. That compares with around 335 crores or thereabouts. So clearly, that was a miss with regard to the standalone operations. Even if you look at it, the VSF business or the fiber business, there's a sharp degrowth that you're seeing on the EBITDA front because pricing is weak, demand as well has been weakish. While the chemicals business, though, did well on a low base, both those two business verticals have missed street's estimates by roughly around 20-22% or thereabouts. But there is some good news because the newer businesses, which is Birla Opus and Birla Pivot, both of them have started improving. So the B2B e-commerce business, that has shown some kind of improvement from around 900 crores. Now it's scaled up to around 1,200 crores. And for the year, they've achieved close to around 5,000 crores, which is good. Even the paints business, from around 700 crores, it's perked up to around 950 crores or thereabouts. And the losses as well are reducing gradually. So from around 350 crores a few quarters ago, that's gradually come down to around 315 crores. The management goes on to say that based on their estimates, they have become the third largest decorative paint company here in India. As per the exit rate of Q4, and also by capacity, they're more than 21% of the market. The net debt number came down a little bit because some of the rights did come in. So expect the stock to open up in the red. The positive, though, is that the paints business is ramping up. The e-commerce business is ramping up, B2B e-commerce business, though, in fact, the losses do continue. But let's hop across to Mangalam. He's tracking a whole host of names, Metro Brands as well as Honasa. Mangalam.
Well, what's common between both Metro Brands and Honasa is the last 3 quarters weren't very good for them, but now they are seeing signs of improvement. So let's start with Honasa, 13.2% revenue growth. However, that's come at no expansion in the EBITDA. In fact, the EBITDA has declined by 18%. Margins too have come off from 7% to 5.1% with a net profit decline of 18%. That's because ad spends have ramped up and other expenses are higher on account of the distribution reset as well. But what's positive is that 13% revenue growth is higher than the FMCG industry, led by 21% underlying volume growth. Some of the core products of Mamaearth, which is their core brand, growing in double digit, and some of the ancillaries like Dermaco and the other companies doing well for them too. So expect, because the stock has halved, expect some green on Honasa. Metro Brands as well. I'm going with green because after 3 quarters of single-digit revenue growth, they've reported double-digit revenue growth, 10% growth on the revenue, and that's reflected in their margins as well, which have improved from 27% all the way up to 30%. The net profit is lower, largely because of a tax credit in the base quarter. The company said the EBITDAs improved due to better cost control and reduction in losses in the Fila segment, and liquidation of old inventory of Fila has been completed in the 3rd quarter. So going forward, operational performance is likely to improve, with revenues improving on account of new brands that the company has been launching.
Okay, all right, Mangalam, thanks for that. Well, Ramco, these numbers are disappointing for the past quarter. Yes, the street was bracing for a weak set of numbers, but this is even weaker than what the street was working with. And the problem is top down. So the top line itself, they degrew by closer on 4%. Some on the street were estimating a volume growth of closer around 3 to around 6%. So that's clearly disappointing. And what's even more disappointing is it seems they're facing pressure with regard to pushing out their volumes. Because after a while, I've seen that Ramco in their core market has actually underperformed the industry with the degrowth on the volumes front. So that's disappointing. And that's why the revenue, EBITDA, margins, all of them are a miss. Now, the PAT number, that took a harder hit because that degrew by closer on 74%, while the EBITDA number was down by closer on 23%. Because they've commissioned capacities, the finance cost as well as the depreciation, both of that went up. However, the management has stated they're on this plan to sell their non-core assets, and because of that, you've seen the debt gradually come down from close to around 5,000 crores. Now it's at sub 4,500 crores, and for the past year, they have monetized close to around 460 crores out of that promised 1,000 crores, and they're saying the remainder will be done by July 2025. So the deleveraging plan is working as per plan. The outlook, though, is good because they are saying that prices have gone up both in trade and non-trade segment, and that's what will bode well for profitability in the coming quarter as well. So the stock starts off in the red, and we'll have to see whether or not the street wants to look ahead and brace for better numbers ahead. But let's hop across to Vivek. Vivek, tell us about GMR Airports as well as Power Mech.
Well, good morning. GMR Airports, late last evening, the company declared its results. Now, it was operationally a better quarter, but one thing that the street will be wary of is the fact that debt has increased both on a year-on-year as well as on a sequential basis. Looking at the numbers, revenues higher by close to 17%, aided by almost a 9% increase as far as passenger traffic volumes were concerned. EBITDA up 23.2% on a year-on-year basis. EBITDA margins are quite steady, almost 180 basis points higher on a year-on-year basis. But higher finance costs, higher depreciation, higher tax expenses, all of this led to a loss on the bottom line, a loss of close to 237 crore versus a loss last time around of just around 120 crore. So this is something that the street won't like. However, what is it that the company has said? The company has said that going forward on account of the revised upward tariffs for the Delhi airport, the company expects better aero revenue, better overall profitability and cash flow generation across its airports. Now coming to Pharma projects, it's a strong finish as far as Q4 FY25 is concerned. Revenues higher by 42% on a year-on-year basis, EBITDA higher by 44%, margins too very steady at 11.6% versus 11.5% on a year-on-year basis, and profitability higher by 54%. The company is yet to upload its investor presentation, but remember, at the end of Q3, the order book was quite strong, in excess of 57,900 crore. Expect a green on both of these stocks. GMR Airports, however, on account of the red figure, may see some booking.
Okay, got that. Thanks very much, Vivek. So green on both of those. Let's go back to Mangalam. Mangalam CONCOR, how did it fare?
It's a muted performance, and the street was expecting no less out here as well because we already had the volumes disclosed and they were a far distance away from what the company had earlier promised, 18 to 20%. The overall annual volume growth was actually 8% itself. Board has approved a bonus, so that may keep the stock afloat in today's trading session, but by and large, nothing really to write home about in these numbers. A revenue decline of 1.5%, EBITDA declined by nearly 12%, which meant the margins compressed. The net profit declined by 2%. The reason why the net profit declined lower than the EBITDA was because of a change in the depreciation method in the third quarter. If you look at both the segments as well, Exim, the revenues grew just about 3.4%, with the margins contracting 250 basis points. Even the domestic business, the revenues declined by 9%, with a 50% decline in the operational performance, and as a result of which, I expect the stock to see some red.
Okay, all right, got that. Mangalam, thanks very much. In fact, at 9:50, we will be in conversation with the management of CONCOR as well. Sanjay Swaroop joins in from the company to talk about the outlook, whether FY26 can be better than the way they've ended FY25. Well, with that, let's move on to Sudarshan. Sudarshan's watching out for GSPL. How was the quarter, Sudarshan?
It's a weak set of numbers from GSPL, mainly on the back of sharp drop in volumes. Company has reported volume decline of 11% on a sequential basis and 23% fall it has seen year on year. Coming to the headline numbers, profit was down 48%, revenue has fallen 9%, and EBITDA has slipped more than 35%, and margin has declined. It has seen a sharp decline. It has come at 52.1% against 73.8% that company reported in Q3 of FY25. Also, operating numbers were impacted by other expenses, which have seen an increase and have almost more than double. It has come at rupees 50 crore versus 20 crore in this last quarter. So I'm going with red for GSPL.
Okay, all right. Thanks, Sud, for that. Let's quickly recap our list of stocks to watch. The ones that have positive news flow or positive earnings are ITC, Metro Brands, Honasa Consumer, GMR Airports, and Pharma Projects. Stocks with negative news flow would be Sun Pharma, Grasim, Ramco, Container Corporation, and GSPL. It's an even split today between the green and the red. That's the equity list, stock list for the morning. Let's find out what's happening in commodities and cryptocurrencies, I would imagine. Manisha is joining in. Manisha, beyond crude and gold, Bitcoin was catching the headlines overnight. Good morning.
Well, and it continues to do so. So it'll be a second straight day where we're looking at all-time highs continuing in case of Bitcoin. So 112,000 is done. Well, actually, Bitcoin is gained up by 16% in the month of May. A very strong increase in institutional ownership, corporate adoption, and JP Morgan allowing clients to buy digital currency have all been very, very supportive factors for this one. Well, actually, when you look at the Asian markets right now, perhaps cryptos is the only thing that's trading in the positive because we've seen crude oil prices heading for a weekly decline. There are statements that OPEC and allies will increase production for a third straight month in the month of July. We anyways have been looking at higher production from US. The inventories have been on the higher side as well. So all of those factors weighing onto the markets. After that very strong run that we saw yesterday in gold and silver, well, that also has gone in for some profit taking. So off its multi-week highs, and same is the case with copper aluminum, which was trading on the higher side for the last couple of days, have also seen some decline. A lot of uncertainty still into the markets there, and the focus clearly now is in the U.S. trade deals with various countries, while the markets over the weekend will also watch out for the U.S.-Iran nuclear talks. So ahead of that, some bit of a profit taking in Asia.
All right, Manisha, thank you very much for that. So that is, of course, commodities in focus. We're going to take a quick commercial break here. The management of Deepak Fertilizers joins us here on the other side. Fourth quarter earnings in focus. We'll also have Siddharth Khemka with us for some fundamental stock conversation.